This is London with MarketHedge. We're going to pay attention to Bitcoin with a nice upshot here. To tell you the truth, great rebound to a difficult level. We almost didn't get a recovery too. This is London, former hedge fund owner, private, non-SEC, not financial advice. Remember on that hourly, we were looking for a recovery to that 115. Let's talk about how far Bitcoin pushed below. Really surprising, to be honest, but we were prepared in this preceding demand zone. You guys know those orders were stacked in this level. These won't actually show up, guys, on the sheets in terms of returns on Bitcoin for MarketHedge. We're going to discuss managed futures and the extent to which we want to incorporate into the public version managed futures. Can be a little bit confusing, a little bit technically, maybe over-oriented for the average trader. So maybe that higher level design trader, if you guys are into managed futures, you can leave me a comment below if you'd like to see what managed futures are. Now, essentially a managed future would be in below a level of support, right, or a recovery level. Anytime you'd have a target, we would manage a long position below at a potentially increasing level. Okay, at an increasing level, meaning scaling in so that upon any rebound to the upside, you would be flush with cash, right? So the requirement is, first of all, we want a target to the upside. That's the number one requirement for a managed future. And I would liken it, I would say you can do it by hand, managing your future interest, okay, below a specific target in the market. You can do it by hand, but it's kind of the difference between guys having a bow and arrow and going to do it by hand versus having an automatic weapon like an AK-47. So if you can set up the AK-47, bam, in terms of your interest and increase in scale in terms of the size and quantity of your positions, these can be really sought after positions in the market. And as I talked about last week, it can enable a lot of freed up trading in the future. So we're discussing the extent to which we want to enable that on MarketHedge. I'll probably have a conclusion over the next week and a half to 2 weeks. So without leaving the technicals behind, do review any materials you have on managed futures. How would they be relevant? Let's discuss Bitcoin now in terms of the degree to which Bitcoin pushed. And you'll see a bit of looks like a bull flag here. We don't have a really strong move to the upside. It's almost more of a measured move if we're looking for a repeat of this quote unquote flagpole. It's almost like a measured move at this point. And we're hesitant to say a bull flag. Why would that be? Because this preceding bull flag, which was perfect, you guys see that bull flag, which was perfect, right, really failed in terms of its completion of a clearly defined flagpole. And we just got a little bit soured from saying, hey, it's a bull flag on Bitcoin. You guys know, with that said, it was a great recovery. But let's talk about some of the components which made it a difficult recovery. This was a difficult recovery. Remind yourselves, in which case managed futures is the approach to go with. And you guys have some prior tape on that, etc. Let's discuss that 117.5, right, across the threshold. If you look on the wick to the specific line chart, you're going to see bulls did a pretty good job up in this zone of meeting a preceding pivot threshold, right, to give ourselves something to look at. And what were we looking at? Pay attention, this left shoulder, that head formation. Where was our right shoulder? We were ready. We were geared and amped at this level to go ahead and push up. Of course, Bitcoin did the trick with a lower scoop, right? And a little bit tricky at this point too, because it's like, well, aren't you looking for this? If you covered down to this level, particularly with MarketHedge, allowing you to stack orders below, yeah, it was a nice pickup in this zone. Now, in terms of the details though, how much did this push down with a target to the upside? How much did it push the traders? And I'll say, especially particularly on Bitcoin versus some of the other investments. If you're looking at Ethereum, Solana, if you're looking at some of the other altcoins, XRP, ADA, you may have seen a lot of additional volatility. You guys signed up for that route. You know, that's why you're trading it. But to the extent that we're looking at, let's say that 114, let's go ahead and scope out. This is a measurement to me, how much we push below. Now, if we're going to be drawing out some extensions, I just want to mark one point of reference here technically on the chart so you can understand and really we can quantify how much were the traders pushed around who may have been looking for what was a really clear, guys, this was a clean throwback target. We all have to agree. This is what made that spill out, the liquidation event. It was publicized, etc. This is what made this spill out difficult, right? Was the fact that it was such a clear on the hourly, though. Let's mind that on the hourly, not on the 4 hourly. We agree? Yeah, so the hourly chart had hit 1, hit 2, hit 3, potentially even hit 4 in there, but we're going to give it 1, 2, 3. So the reliance on the hourly, very clearly defined, and again, not that 4 hourly, which is a little bit stronger of an indicator. We're going to say a little bit, quite a bit stronger of an indicator. What we were looking for here, though, if we scope this out, let's go ahead and say from the amplitude from the top to the bottom here, we almost completed down to let's say two and a quarter, 2.5, nearly 2.5 times the amplitude here to the downside. Depending upon your time frame, you're going to find that, meaning that, and this is a big deal, pay attention when you're talking about heavy reserve capital, when you have something that doesn't just go a full measure. You see that? 100%, that one will be the 100%. It doesn't just go the full measure. It actually goes in relation to that topping pattern into that nice target to the upside. It goes, and then we say, well, not only 2, but really 2.5, right? So if we're looking at 1, 2, and then bam, 2.5. So that's the first amplitude. That's the second amplitude, then 2.5. Now, you can make it part of your trading dynamic that you're only going to take a hedge, you're only going to trade asymmetrically, or that is buy the dip below a topping target, right? A throwback measure or any kind of a value-oriented entry. You're only going to do it to the extent that you have 2.5, and you can do that very clearly. And you can do it with 2. You can say, well, to the extent that I am covering the field, right, with 2 times the amplitude or 2.5 times, you can make it for yourself 3 times the amplitude of the topping formation. Generally speaking, the 3 times the topping formation, it'll be hit, but with a level of infrequency. So this is almost in that category. It's the 2 to 2.5 times the specific amplitude of the topping formation, which is on that further excessive, boundary of the dynamics of the rules that we generally put together. Is it a safeguard measure? Absolutely. Absolutely. To the extent that you're willing to cover every trade with up to 2 times its amplitude, you're going to find yourself operating a lot more comfortably in the market. But what does that do? It reduces your profit expectations. Potentially, to the extent that you are compromising, you're mitigating or lessening your margin or your leverage and saying, well, I'm going to back off, which is the name of the game. Guys, if you haven't developed consistency yet, if you're backing off that leverage or margin parameter, yes, to get down into those lower levels. Now, that or a stop loss, we agree, that or a stop loss can be a containment measure in terms of you preserving your capital. That's the bottom line, and preventing excessive losses. Now, to the extent that we were looking for an inverse head and shoulders, let's just discuss this, because this made it difficult, and this would really be in terms of just the absolute performance to the downside. We'll just call this a performance issue. What's the really saving mechanism around that performance measure? By the way, if you'd like to have one, it's just beware anytime. Pay attention. Beware anytime, and I'll give you a twofold here. Anytime we're to the right of a specific channel formation to the upside, anytime we're to the right, okay? Be on guard in terms of longs positioned to the right of any channel formation to the upside. Be aware that your money's at risk, especially if you're entering in long. It's a great area for shorts, can be a great area for shorts. Now, let's discuss very quickly some of the technical measures that came into play that we identified and that we talked about. One was the downside target, and I may clean this up a little bit, but the downside target to where? To the standard deviation on the daily. Yes, sir. Okay, so standard deviation to the daily, perfect hit into that zone. That was a target which compromised the weekly, if you'll recall, that weekly specific, and we'll definitely clean this chart up, but compromise that weekly 20 moving average so briefly, right? But to get us to that lower standard deviation on the daily, you're seeing a nice pick up right now on the 20 moving average for Bitcoin. Now, Bitcoin is, I'd say, just outperforming right now, obviously, on this pick back up. As you look at your value consideration range focus on the daily. Focus on your daily Bollinger Bands. Just look at the degree of conformance here. And in terms of whether or not you're stacked below or stacked above, longs below, right, or shorts above, the degree of just the degree of payout that you're looking for with what? With one understanding that when patterns come into play, you need to be again on guard. In terms of that specific bull flag precedingly, that was a difficult short. You wouldn't say, well, we're over the 20 moving average, we're short. And you have to mind your patterns, right? Which makes it difficult as we get into that discussion. What were we looking for here? We were looking for a pickup in this specific zone. If we look at that 116, it's going to be higher on lower time frames. But if we're looking for a breakout of that 116, 117, where bulls completed a nice top, we really wanted a symmetrical, excuse me, and it wasn't guys, it wasn't out of bounds for us to have expected a really nice symmetrical right-hand shoulder. Can we agree? Yeah. So to the extent that we went ahead and dipped really almost in line with this support, it's kind of like, where are the bulls? So we overperformed in terms of that. We outperformed that topping formation on the lower time frames to about that 2.5, 2 point. And if you read Bulkowski, Encyclopedia of Chart Patterns, you will be able to see the degree to which those types of outperformances or overperformances are expected in the market. It's a marginal percentage. It's a small percentage. But with that said, we were looking on a pattern basis for that pickup in this zone. So it's been a tough, I'd say it's been a challenging, to the extent that challenges were overcome though. And one of the reasons I'm on this daily is just generally obeying the maxim that managed futures underneath this specific 20 moving average have paid well, okay, with long interests. And managed futures over the specific 20 moving average with what? With a short interest have typically paid pretty well. So that is just what you're seeing with the understanding again that there needs to be some degree or a lot of degree. Like for instance, we went long in this zone. You guys remember that great breakout zone here to the upside. You've got to be able to incorporate your patterns into whatever dynamic you're looking at. So that would be the trick. Now let's talk about the specifics on the macro dynamic here. We pushed a bit. We're back in play mode. These would be, for instance, these would be managed futures. These would be a look at managed futures in terms of just maintaining, like, where would your orders be stacked to what level, etc. And guys, that's up to you. This is London, former hedge fund owner, private, non-SEC, not financial advice. And you can have I just say a strategy that fits your specific thresholds in terms of risk, in terms of performance, what you're looking for. Are you building deep cash reserves? Are you furthering those deep cash reserves? I tell you, if you're doing that on Bitcoin, it's an extremely risky game. You're probably not going to find a riskier game than Bitcoin. Now, we have hit that upside specific target. I'll say also that 1 1/3 chance of the 4-hourly RSI to the upside. We agree? Yes. We are overbought. We went and flew from oversold to overbought. When I was in this zone saying we have a 1 in 3 chance, I'm going to invite you to look back at Bitcoin. You're going to see some absolute takeoffs between the oversold and overbought. You'll just see some nice shots to the upside. So as uncomfortable as when we're heading down, to just go ahead and say, well, we have a 1 in 3 chance of heading back to the upside. Look at Bitcoin. Look at this chart. How many times have we hit oversold? Yeah, you've got a 1 in 3 chance. Boom. Look at that move on the chart. Bam. Yes, look at that move. Look at this one, 1 in 3 chance. You got it. Boom. Bam. Guys, these are nice moves just based on the 4-hourly. So to the extent that this was predictive, yes. To the extent that it was reliable, well, you got a 1 in 3 chance. So there's a bit of a difference here, we're going to say, between being predictive and being reliable, right? So gauge those two measures as you would. Level of resistance incoming. Is it a good area for shorts? Well, what do we know, guys? We've got the buyers coming in, and what's the issue right now? Well, what can happen? Well, buyers came in. They can continue to buy, right? We can continue to push price up. You got it. That's option number 1. Now, option number 2 is sellers regain control, at least temporarily. And what happens? Then the buyers come back, take control, and we hit about a mid-level of the RSI. We're looking at that as option number 2. Option number 3, if you're a bear as well, you know what? The sellers take control, take it from overbought to oversold, and what happens? That's our 1 in 3. And I say 1 in 3 because these are literally the 3 possibilities of what can occur in the market. We're on the RSI. You guys got it, 4 hourly. We have a 1 in 3 chance, period, of heading back down to oversold turf. That's the bottom line. Don't overcomplicate it. Now, when we incorporate what do we have to do? We have to incorporate any patterns into the dynamic. Do we agree? Yes. Now, we are at a bit of a disadvantage in that regard. Why? Because we have a differentiation. I'll say we have a differentiation, or I would just say a lack of perfect pattern formation on the specific, for instance, on the daily. Let's look at the wicks that we have right now. Whereas the market is being invited to look at a channel formation. You guys know, we said we covered this very briefly in terms of hit 1, hit 2, hit 3 on the wicks. Yeah, covered to the upside. We have hit 1, hit 2. So do we have a bull flag? Technically speaking, and again, I'm going to default to a measured move, meaning what? Well, anytime that we have something that appears like this without a huge, strong run up, a bull flag is intended to be part of a bull run, which is going to have a better run to the upside, then a channel that is cutting against that run to the upside. So this preceding run up, yeah, that's a bullish run up. Here, boom, right? Is this a bullish run up? No, guys, it's more of a measured move. If bulls want to try and dance off this to the upside, all right, but with the reminder that we still have another competing pattern, which is what? And the measured move, by the way, would be preceding measured move to the upside. And we can get that one of 2 ways. We can get it through either taking the specific preceding parallel here and drawing to the upside, in which case, or with the stick measurement that I just did here, right? So this would be more consistent with a quote unquote measured move, right? Wherein we're looking at anytime you see a measured move, let's go ahead and draw a parallel channel to the upside. Now, with this in mind, as we're looking at more of a constructive channel rather than just a bull flag, okay, we're looking at the pattern construction and what are the competing patterns or the accompanying patterns. We'll say the accompanying patterns for this type of a move. Since we have level of resistance across the top, noted, first of all, as long as we're over that 20 moving average on the daily, thumbs up for the bulls. We agree. If you're maintaining over 114,000, we're bullish, okay, on any competing pattern or otherwise. But we want to integrate, for instance, this specific pattern has been guys, I don't want to say nail in the coffin for the bulls, but find me a broadening top that has performed really well for Bitcoin over the preceding 2 to 3 months. Do we agree? Nearly. So I don't want to say nail in the coffin thus far, but find me one, guys, find me one of these that has decided to go to this level of resistance, yep, and powered through, boom, to the upside. Find me one. If you can find me one, guys in the back, shout out to VIP, guys, what's going on? J Mac, what's going on? Luke, let me know what has accomplished in terms of a broadening top formation, which we're stuck with. Now, that's the mitigation too. If we're going to look at the patterns in play and what would mitigate this potential interest of even a measured move, yeah, a measured move, or definitely the interpretation of us having any type of a bull flag, right? We're looking at more of a constructive channel in that in the dynamic of this specific, and just let's take this away for 1 second, a constructive channel in the dynamic of a very difficult pattern for the bulls. That's the bottom line. So minding that, we revert. Let's just go ahead and reverse the discussion back to this 1 in 3. To keep it simple, what are your odds of continuing to go up? 1 in 3. So your cash position, I recommend your cash position reflect that. Very, very easily done, right? And as long as you maintain in your accounts and with your trading a 1 in 3 principle, I think you're going to be doing very, very well. When these pay out, pay attention. When these pay out, if they were to double or triple an account, right? If you're holding on and you want to make your account go up by 10, that's, guys, and you're at 5 times your account, That's typically when you want to shove some of that in the back and start building those stacks, build those racks. If you're indignant and you just have to build it and you want to multiply your account by 10, that's it. No one can tell you any difference. Just understand you're going to burn through several accounts before you multiply an account by 10. This specific account, you guys know that. This specific account, when it started at 10,000, right? Did we burn through a few? Yes, we burned through a few on the way up, okay? It was actually on the way down, if you guys will remember that. So in terms of the details, shouting out to all the VIP. Appreciate all you guys in the back. Let's see, let's reload MarketHedge real quickly in terms of the details. Come on, MarketHedge, load me up. Let's get on this hourly time frame. What we're going to be looking for is maintaining, trying to maintain, I'm going to say up and over that 20 on the daily. And you can kind of tell I'm in the mood to stream a little bit, to live stream a little bit. So maybe we can get some of that in. I would appreciate the opportunity to talk to you guys, kind of hang out a little bit. We're going to find a good time for that to occur. And in terms of that, this is our line in the sand. Congratulations to everyone who did recoup through some sort of a mechanism. And again, I will be working very hard in the background to decide whether or not managed futures is going to be something that we want to deploy into MarketHedge with the understanding there's a lot of competition right now in terms of what features and what time we dedicate to a new feature if we're going to bring any new features. So that's the bottom line. So if they remain off, let's just say off system or on a private system right now, they may just remain off system on a private system. You can let us know with your comments in the back and in the comments below if you think that would be nice to have in terms of a managed future optionality here. And we appreciate all of you in terms of your willingness to be a part of this community. Number one trade group, dudes, what's up? Nice to see some guys in the back that are really willing to make a difference in their lives. You guys got that right, difference in their lives through just really solid TA and treating the market the way that the market is supposed to be treated, right? You guys are doing a great job of that, and it's a pleasure to be around you. There's just no filth in the group, right? There's no scum. It's just in terms of the way the market is treated and appreciated. It's approached very professionally, and I appreciate all you guys for that. So looking at guys up and over that 20, and we're in a bit of a boxed-in scenario. I'll say that as we're looking to maintain up and over that level of support of the 20 moving average, right, which we just got a good bounce on that weekly. This is the daily, right? Just look at the fact that bulls a little bit boxed in here across the top, and to the extent that we have any downside target, you have to look at the 4 hourly, right? You just have to, because this specific small outperforming pattern here that got a lot of the bears twisted up after the bulls got twisted up on the way down. It's a clear target. We agree? Yes. It's one of the reasons I didn't want to launch in heavily in either direction on the trade video yesterday. So looking at that level of support across the top here, which did recover. We were split 50-50. We had a target here. We had a target here. It's like, let's let Bitcoin do what Bitcoin needs to do. That's when managed futures can definitely toe the line for you guys in a situation like that. So this is London with MarketHedge. Appreciate all of your time and going through the technicals here. If you have more to add, please put it in the comments. I'd love to hear it. Again, former hedge fund owner, private, non-SEC, not financial advice, and guys in the back would love to hear your additions in terms of what you're looking at, even if it's on a different asset. Let me know what you're looking at so we can potentially further incorporate that into either our videos here or potentially our live streams. We'll be at F1 Singapore. This is exciting, F1 Singapore. Not the whole route. I don't know how much of the actual events and everything else, but we want to appreciate, we just want to appreciate our development development team at BTCC for their direct input on MarketHedge. It's been very important. Appreciate them stepping up, and I can't wait to see you guys out at the F1 event in Singapore. So that'll be great. It'll be loud cars. It'll be lots of fun, a little bit of flash, and I'll be in the background, I promise. Not making too much noise, as I don't know. I've had a lot of racetracks in my life, so it won't be my first time seeing a lot of tires and people fly around a track. With that said, hopefully it won't be too traumatic with all the wrecks I've had in my life going around a track. With that said, it's going to be a blast. Looking forward to seeing you guys at BTCC, our critical partners here on Market Hedge, and it'll be great just to sit and celebrate in terms of the accomplishments of the efforts you guys have put in and we've put in terms of Market Hedge. This is London with Market Hedge, and we'll look forward to you guys a great rest of the week. Again, looking forward to your comments as well, and thanks for all your time. I know it took a bit of time. Do let me know, guys, in the back if you would like to see any live streams, if you would like to do that in the back on Market Hedge, or if you would like to do that, and again, we can live stream in the back here on Market Hedge, no problem. Or if you guys would like to keep this on an open public channel such as YouTube. We'll talk to you guys soon. Thanks for the charts in the back, J-Mac. Looking good. Yeah, look at this. Fan, maybe. Look at that. Very, very nicely done. Yeah, with a rising wedge component. Big time. Very nice. ETH. Killing it. We'll talk to you guys soon. This is London with Market Hedge.